You've built up a ton of equity in your home, but you don't know how to access it. If you're thinking about cashing out some of that equity to maybe start a business, pay off some high interest debt, buy an investment property, or even build an ADU, the wrong move could cost you tons of money, or even worse, you could lose your house. Back in 2008, a lot of homeowners used their equity in the wrong way, and they paid the price by losing their homes. Fast forward to today. You might be someone that's sitting on hundreds of thousands of dollars of equity. And if you are, congratulations. But you might also be wondering, if you try to cash out some of this home equity, will it raise your monthly payment too much? Or even worse, will you lose your home? And those are both real concerns. And if you're feeling this way and have those questions, this video is going to be for you. My name's Darren Tsai. I'm a licensed mortgage and real estate broker in California, and my channel is dedicated to helping people just like you build wealth through real estate education. In this video, I'm going to cover 3 different ways you can get cash from the equity in your home, and I'm going to share my opinions on them. The first is a HELOC, a home equity line of credit. The second is a HE loan, a home equity loan. And the third is the home equity investment. Now, let me break down all 3 of these for you. The first, HELOC, home equity line of credit. Most people have heard of this one. The HELOC works like a credit card against your house. So what will happen is they'll give you a line of credit and you can borrow only what you need. An important factor to know about the HELOC is that it's going to have a variable interest rate. So that means from year to year, if the interest rate goes up, that means your monthly payment is also going to go up with it. Another thing to know about the HELOC payments is that you're usually only paying interest for the first 10 years. So HELOCs can be a great option if you need some flexibility, because you only pay when you actually borrow. So if you get a $200,000 HELOC and you only borrow $20,000, then you're only paying interest on that $20,000. The rest of the $180,000 is there for you to use, but you're not paying any interest on it until you actually draw it. On a personal note, I actually used a HELOC to build an ADU, and I decided to use the HELOC because we were paying the contractor in milestone completions. So when the first part of the project was done, we would pay him a large lump sum. And if you want a breakdown of how much it costs to build an ADU, there's a link to another video that I talk about my entire experience building an ADU. My biggest lesson from building that ADU using a HELOC was that if you do take a HELOC and you borrow the full amount, be prepared for rates to change. So my ADU was completed a couple years ago when rates were around the 3s, and our payment was less than $1,000 a month. So if you've been following the market, you probably already know interest rates essentially doubled. And what that meant for me was that my monthly payment on the HELOC doubled as well. So if you do decide to go with a HELOC, make sure you're prepared for those rate changes and make sure you have a plan in place to pay down the balance. Now that you know the benefits and some of the risks of the HELOC, let's talk about the home equity loan, the HE loan. A HE loan is just going to give you a big lump sum of cash with a fixed interest rate. So what I like about the HE loan is that you have these very predictable monthly payments, and it's a fully amortizing loan. So what that means is every month you're actually paying down some of the principal and you're paying some interest. And at the end of the term of your loan, let's say it's 20 years, the loan will be fully paid off. And so this is a little bit different than a cash out refinance. A cash out refinance would replace your current mortgage, whereas the HE loan would be a second mortgage on top of your first mortgage. And why this makes a lot of sense in today's market is because many of you have interest rates below 3%, and we don't want to touch that at all. So some good use cases of a HE loan would be when you need a large lump sum of money to maybe pay down some high interest debts. Maybe you're paying 20 to 25% on credit cards and you want to increase your monthly cash flow. So you get a HE loan, pay those debts off, and you have a lower interest rate and lower monthly payment. Another good scenario is probably starting a business. Maybe you need some capital for your business, but you don't want to have these variable costs. You want to be able to budget and you want to have a fixed monthly payment. So the con with the HE loan compared to a HELOC is that your monthly payment probably is going to be a little bit higher just because you're paying principal and interest for the term of the loan. And the third option, which is my least favorite option, is called a home equity investment. So this option is where you get money up front, you don't have a monthly payment, but when you pay these people back, they're taking some of your appreciation. And so many times, I think you end up giving up way more depending on your market. Specifically, in my main markets here in Southern California, appreciation is one of the biggest factors to growing wealth. So I am all for you keeping the appreciation. Now, obviously, this one sounds great up front, right? You don't pay anything on a monthly basis. There's really minimal qualifications and they just give you this lump sum of cash. But what I hate about this is I don't think it's that transparent on how much you're really going to be paying them back, because you don't know how much your home's going to appreciate, but typically that's the biggest wealth builder for homeowners. Now, another thing to consider with this loan is that even if home values go down, you are still going to have to pay back the money that they gave you. So if values go down, obviously you're going to be paying them less, but you still are going to owe them that initial loan that you took from them. Personally, I don't like the home equity investment option, but I'm here to educate and show you all the options. Now that you have an idea of these 3 different options, I'm actually going to show you the numbers in an example. Keep in mind, these numbers are just for educational purposes. It's not some sort of quote or anything. These are just here to give you an example. So I'm going to use an example that we see all the time. A $700,000 home value that has $400,000 in equity. You're asking to borrow $200,000 in cash. For this example, we're going to do a HELOC at an 8.5% interest rate, a HE loan at 8.25%. On the home equity investment, they're going to be taking 3% of the loan up front as a fee, and then they're going to take 15% of the appreciation. In this example, I'm going to share the result after 10 years using each of these products, and you are deciding to sell your home. So we're going to start with the HELOC. So at 8.5% over 10 years, you would be paying about $1,417 a month, and that would be interest only. So most HELOCs, depending on the terms, you're paying interest only for the first 10 years. Now, at the end of 10 years, your total cost would be around $370,000. That would be 10 years of interest, which would be $170,000, and you're paying back the $200K. And the remaining equity at the end of 10 years would be around $787,000. And your total equity gain here would be about $387,000. Keep in mind, the main benefits of the HELOC here is that you can draw only when you need it. So this example is assuming at the beginning you took all $200K. These numbers could be way lower if you only borrowed $50K and then you paid some back, and then maybe you borrowed $20K and then you paid some back. And then obviously the risk of the HELOC is that this monthly payment is probably going to be different over the years because it changes every year. Now let's talk about the HE loan situation. The monthly payment would be about $1,700 a month, and that would be fixed over the 20-year term. So with the HE loan, your total cost over the 10 years would be around $205,000 because you're paying down principal and interest there. And then your remaining equity after the 10 years would be $848,000. These are all estimated, keep that in mind. But your total net equity gain here would be around $449,000. So the main benefits with the HE loan are you have that fixed monthly payment so you can budget accordingly, and you're paying down the principal balance as you go. The main risk of the HE loan, obviously, is this monthly payment might be something that's hard for you to handle every month. And at the end of the 10 years, you would still have to pay off the remaining principal balance. Now let's talk about the home equity investment. So monthly payment, you got nothing. Cool. You don't have to handle that. But the total cost over the 10 years is going to be around $243,000, leaving you with $744,000 of equity. And obviously here, your net equity gain would be $345,000 roughly. The main benefits here are you have no monthly payment, and if the value of your home drops, then you pay them less. The main risk here is that they are taking away your biggest piece of wealth building, the appreciation in your home. Now, if you're curious about your home equity and the different options you have, there's a link to HomeBot in the description below. It's a free software for you. I pay for it, but it just allows you to see an estimated home value and the different options that you have with it. So if you've made it this far into the video, congratulations. I'm sure that means you have a good amount of equity and you're trying to do something smart with it. Maybe build an ADU, buy an investment property, start a great business, or just increase your monthly cash flow by paying down those high interest debts. Overall, I think depending on your situation, I personally like the HE loan or HELOC better than the home equity investment, but that's just my opinion. And I pretty much say this in all of my videos. I want you to make the best financial decision for you and your family. So if you decide to go with one of these options, Make sure you're working with someone who gives you all options and explains them thoroughly. And if you don't know who to reach out to and you want to talk to me directly, you can email me at darren@realdarrensci.com. As always, thank you so much for watching, and I hope this video truly helps you.